Wednesday morning. It's McCollum on Business. Well, I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. We'll look at Market Watch, what's happening with that ceasefire announced yesterday. Of course, we'll look at national, local stories, and also stocks we're paying attention to as well here on this Thursday. And yesterday was on this Wednesday, yesterday was a big sell-off day on the market. Let's get into it with that Market Watch. And with that ceasefire being announced, folks, you can exactly imagine what's happened. It's our big story of the day. Right now, the Dow Jones, well, it's up 1,243 points to 47,900 as of right now. The S&P 500 is up to 148 points to 6773 for it. The Nasdaq's up 622 points, 32,646 for the Nasdaq, and then the Russell 2K. It's up 7 points is what you're seeing on your screen. I can tell you it's up a little bit higher than that today as well. 2630 for it as that is going. I see the live NASDAQ, the live Russell 2K right now at 86 points as we're talking about it. We'll have to see, what that fluctuates to throughout the morning. Then you got Bitcoin above 70,000 here also on that ceasefire news. 71,693 for Bitcoin. It's all simple, folks. Ceasefire happened. Oil prices have dropped here today as well. And so all that's kind of favored into the market side here of things. The uncertainty has disappeared. There's even optimism the Fed will cut rates again here coming up with the ceasefire being announced. We'll talk about that here in just a minute. But first, stocks we're paying attention to right now. We're going to look at some industries in a little bit, but right now we're going to talk about Levi Strauss. You know them, jean maker apparel, 13.09% up here this morning. They've reported a revenue and earnings beat for their first quarter. They said direct-to-consumer sales, made up half of its revenue at Levi, which means that's the first time that's ever happened, direct-to-consumer sales. They had also raised its full year's earning guidance for Levi Strauss. So there you go. Positive numbers there in Levi here coming up today. And then let's look here locally, right? A big company based here out of Arizona deals with a lot of copper mining. Is what they're known for. Freeport McMoran is what we're going to look at here. So they're up big today as well, 7.39%. Metals jumped this morning. Not a shocker with the news of that ceasefire. Now, Freeport is, one of the world's largest producers of copper, while they have the huge presence here in Arizona. They're up that 7.23% because the worries that demand for the industrial metal of copper, the fears were the demand would weaken of copper if the Iran-U.S. war slowed global economic growth. Well, obviously, a ceasefire, everybody thinks those worries are gone, and that's why Freeport McMoran up today, 7.24%. And then Supermicro Computer as well. They're up today, 4.08% right now. They said that two independent members of the company's board are conducting an investigation specifically regarding the indictment of employees accused of smuggling NVIDIA chips to China. No set timetable for the investigation, no real details of the investigation other than two independent members of the company boards are doing that investigation. Supermicro did say that the company won't comment further until the investigation is complete. Up 3.93% here for Supermicro Computer this morning as well. Later on when we come back and look at stocks, we'll look at some industries obviously being affected by the ceasefire and oil prices. We'll look at energy stocks, Exxon, Chevron, Halliburton, those types of stocks we'll talk about, and also travel stocks because oil prices are killing the airlines, oil prices are killing the cruise lines. We'll take a look at those stocks as well coming up. But first, obviously, the big story, the ceasefire, the 2-week ceasefire coming up as well. And based off of that news, last night, oil dropped. If you saw a graph of oil last night, it went from high to down huge amounts here off a cliff last night. And they continued this morning, cratering here this morning. President Trump, as you know, suspended the wide-ranging bombing campaign on Iran 2 week ceasefire happening as of now. He put out on True Social, which is where the president posts things. I agree to suspend the bombing and attack of Iran for a period of 2 weeks. He went. Now, by the way, this was like an hour and a half or so right before that 8 p.m. Eastern, 5 p.m. Phoenix time deadline. He went on to say on True Social, this will be a double sided ceasefire. The reason for doing so is that we have already met and exceeded all military objectives and are very far along with a definitive agreement concerning long term peace with Iran and also peace in the Middle East. Now, that came from the president's side, but Iran's foreign minister, he did come out and confirm the acceptance of the temporary truce for their in a statement that they put out as well. Now, he did say that if attacks on Iran are halted, well, its own operations would cease, and that, quote, for a period of 2 weeks, safe passage through the Strait of Hormuz will be possible by a coordination with Iran's armed forces. So, reportedly, which is why oil prices are plummeting right now because the strait is reportedly going to be open for the next 2 weeks at a minimum here. So Brent crude, the futures of them overnight, Brent crude, it fell 14%. It was down to $94 a barrel this morning. The futures on the Texas Intermediate, which is the U.S. benchmark, well, it went on 16% down. It was trading at $94 this morning as well. So you can see a huge drop. These were $910 range for the last couple of weeks, specifically yesterday as well. So that's what's happening. That's why the market is skyrocketing today as well, because stocks are rebounding here with the oil stories being down. Let's move away from the war situation as we have supposedly a couple weeks for things to simmer and negotiations to happen. And there's a new Gallup report out there. U.S. workers are less optimistic about the job climate and the level of engagement with their current jobs. Well, it's remained flat out there. Pay attention if you're a boss. Yes, yeah, working for your company has become stale, according to your workers. Gallup released its 2026 State of the Global Workplace report yesterday. Excuse me, actually early this morning. I apologize. And it showed that while 51% of global workers think that it's a good time to find a quality job, well, the sentiment among U.S. workers declined to 28% in the fourth quarter of 2025. So that figure represents a big decline. It was at 46% in the fourth quarter of 2025. Big, steep downward trend there as well. By the way, if you want to go back to 2022, it was a 70% reading at that time in the second quarter of 22. So here's what, the job climate, you know, how free are you, right, in the job and how much you like it? Well, you're feeling stuck where you're at, is what this report is saying. So now what's the solution to that? Well, organizations need to get better at driving systems, things like solid performance management. Good communication is really important right now as well between managers and employees to kind of get through the uncertainty here of the employees. When workers do feel stuck and they feel like they don't have a choice about finding another quality job, well, their engagement will start to drop. Active disengagement will actually start to go up when people lack choice because they're stuck in jobs that they don't want to be at. Well, the communication needs to step up in things. Workers who said they're looking to find a new job reported not getting much of a response even after applying for multiple jobs. Respondents in this survey did say who have the ability to do multiple things. Well, their perception of the job climate was more favorable because obviously more options if you can do more. The report's findings also demonstrated conditions that Gallup has called the Great Detachment. And that's their wording for it. And that's just basically when people are actively looking for work or watching for openings, and while also, reporting that they hate where they're at right now. Low levels of satisfaction with their current employer out there. So, look, bosses need to step it up. Employees are disenfranchised working for you right now and looking at other places. This economy. Pay attention. Hey, if you're looking for a house out there, some good news, but not enough to probably get you off the sidelines. The Mortgage Bankers Association, that's the MBA, they said this morning that the contract rate on a 30-year fixed rate mortgage, well, it actually fell 6 basis points. It's at 6.51% for the week ending April 3rd. So that is coming backwards finally. It was a 7th month high hit the prior week. Had gone up for several weeks in a row. If you want to refinance your mortgage, well, refinance applications went down 2.8% as well. Purchase applications, meaning you're buying the home, well, it was up about 1% from the previous week, but it's still 7% lower than a year ago as well. Mortgage rates, as you know, have climbed since the end of February with the Iran war starting. 42 basis points up since February 28th. So big increase here as well. So, obviously mortgage rates have gone up because of Treasury bonds and Treasury yields. Well, they've been up huge as well over this same time frame. So we're getting a little bit of relief as of April 3rd. That was before the ceasefire was announced yesterday. So what'll happen today is yields are actually down today as well here on the market. And if you're in the market for a used car, we warned you about a month and a half ago that wholesale car costs, meaning people going to wholesale auctions, et cetera, buying cars, prices were up at that time frame 1 to 2%. We told you this about a month or so ago. Well, now we have hard numbers here. As obviously those cars have hit the market now, and what are we looking at? Well, bad news is if you're in the market for used cars, you're facing the highest prices in about 3 years. Wholesale, we get this from Cox Automotive and their organization, but wholesale prices for used vehicles they actually rose to their highest level since the summer of 2023. It did that in March, the highest level there. Now, Cox Automotive, Manheim Used Vehicle Value Index, they're all the same company, but the Manheim Used Vehicle Value Index rose 6.2% year over year, and it's up to a reading of 215.3. Now, that data from Manheim did go on to show largest wholesale marketplace. I'm sorry, that they are the largest wholesale marketplace in the U.S. That's that Cox Automotive brand you hear about. Well, they found that demand for used vehicles is not just strong, but it's through the roof right now. Values rose 1.4% in the month of March. Now, the report noted that is well above the long-term norms. We're about 2.3% from the start of 2026. That Manheim report found that buyer activity was strengthening. There was increased competition for the available inventory in the wholesale lanes. Sales conversions rate, well, it rose to 68.2% in March. That's 4.6 percentage points higher than the most recent 3 year average for March. It's up 5.5% from that number, the revised number in February, and that was a rate in February of 62.7%. Now, right, gas prices are through the roof right now, as we all know, and not it should be a shocker here that used electric vehicles showed strength in the first quarter. With firm pricing and activity for the quarter, values rise alongside seasonal increases. Interesting enough, because new EV sales are down after they took the rebates away, but used EVs actually offer consumers affordability advantages over new EVs. And there's also an increasing flow of off lease EVs that are actually entering the wholesale channels as we speak now. So I'm in a Chevy Blazer and Equinox Facebook group. The amount of people in the market for used Chevy Blazers or Equinox in that group is staggering to me. And this report kind of confirms that as well. Retail used value sales, well, they showed momentum with first quarter sales up 2% compared with the same level a year ago. Inventory also tightened. Yes, the day's metric declining below 40 in March. That was the lowest point this year. It's actually way down from last year as well in the same time frame. So Cox Automotive's outlook for 2026, we told you this about a month ago. It sees used vehicles continuing a stronger than expected start to the year. They will be offset by softer second half of 2026. So they expect total used vehicle sales declining 1% year over year once we get through the end of the year. So if you're looking for a used car, wait until second half of the year. Might get a little bit more options, more easier on the pocketbook as well coming up as we talk about that. And Gosh, a year ago or so. It's been a while, but here's an update for you on a lawsuit. Lawsuits don't move through quickly. Well, Deere and Co., right? John Deere, they've agreed to pay $99 million as part of a settlement that would resolve that class action lawsuit that accused them of monopolizing, becoming a monopoly on their repair services. About a year or 2 years ago now that this all happened, and we told you about this here at McCollum on Business. Deere and Co., well, it does business under the John Deere brand, as you know. It's faced a handful of white to repair complaints over the years. Well, this deal, this $99 million settlement, well, it was announced on Monday. It does need final approval from the court, but it would settle that lawsuit in 2022 that accused the company of withholding repair software and conspiring with authorized dealers to force farmers to use their services for repairs only. That was basically meant you have to go through John Deere, even though you could otherwise fix the tractor and other equipment yourself, or even use an independent repair shop out there. This would be like Ford saying you can't take your car down to Firestone or Christian Brothers or whatever you want to take your car to. You have to bring it back to Ford only. The plaintiffs alleged that that meant Deere and its dealers, well, they could charge higher, super competitive prices, meaning not competitive prices, and even reap benefits from an unlawfully restrained market. Deere has continued to deny any wrongdoing, no shocker there, and they maintain Monday that dedicated to supporting customers' ability and even the access needed to repair their equipment. The company did agree to the settlement, quote, to move forward and remain focused on what matters most, serving our customers, unquote. Yeah. So under this proposed agreement, the $99 million would go into a settlement fund for class members who paid Deere or to authorized dealers for large agriculture equipment repairs between January 10th of 2018 and then, of course, as of the deal's preliminary approval timeframe. John Deere also agreed to additional injunction relief that's aimed at strengthening the availability of repair resources, things like diagnostic checks more available out there for these farmers. So interesting enough, it's not over for Deere and Co. No, because even beyond this settlement of the case, if it's approved by the judge, it still faces separate litigation from the Federal Trade Commission. The FTC actually sued Deere in January of 2025. If you notice that time frame, right at the end of the Biden administration, well, the Biden administration accused the company of unfair practices that have driven up equipment repair costs for farmers while also depriving farmers of the ability to make timely repairs. Deere at the time said the claims were baseless. Well, they've settled with the class action lawsuit side of it. What happens on the government side, I guess, is the next step here for Deere and Co. And folks, interesting thing happening out there. Maybe you're on this side of this. Hope you are out there. But, the U.S. middle class is shrinking. We've heard that for a lot of years, and it has been shrinking. But you automatically start to think that it's shrinking because people are becoming, more poor, if you will, moving out of the middle class downward. It's actually not the case anymore. Yeah, more households are actually climbing into the echelons of the upper middle class, all due to income gains in recent decades. Now, this is all research from a company called the American Enterprise Institute. They're nonpartisan, or at least claim they are. 31% of U.S. households can earn enough to be considered upper middle class. That's about a threefold increase since 1979. That's the nation's largest economic group now as well. The research is kind of broad as well, but it does something interesting. It does not take into account geography. So while you can make, let's say, $100,000 in Manhattan, New York, well, you're considered poor there making that much. But $100,000 in Des Moines, Iowa, you're considered very upper middle class. So it doesn't take the geography into account here at all. But the share of Americans in the core and low middle class segments it's actually declined over the same time frame since 1979. Now, part of that is because more households in those income groups, the poor, the core, they jumped ahead economically. The findings underscore the broadest shift in U.S. economy as more households move up the income ladder. Consumer demand is tilting toward higher end goods, and services. That's why you're seeing things like on airplanes, more premium seats that people can afford them more moving forward. So now they call this a K-shaped economy. That's which higher income consumers are spending more, while lower income households actually are pulling back and being very cautious on their discretionary income. Well, that is a big portion and a big hallmark here of the economy after the COVID pandemic. Analysts based on U.S. Census data, which analyzed family incomes between 1979 and 2024. The last year in the study, 2024, the most recent available data is what they did with this study. Now, the shift means the upper middle class, which they define as households earning between 153 and $461,000. There's some change in there, but let's say that for a family of four. Well, that constitutes the largest income group in the U.S. officially. The share of rich households now makes up 3.7% of the nation's households. That's about 12 times higher than in 1979. Now, like I said, they didn't take into account geography. So that is an interesting other component you have to deal with because people were living in New York make a lot of money, at least in the eyes of us here in Phoenix or, like I said, Iowa or Minnesota. But they also struggle more with those higher salaries there as well. So interesting study there based off of that. And when we come back, we'll get into some local stories. Fry's Food Stores, well, they messed up their communication, right? We just talked about that with bosses. So they messed up. You have to pay a little bit. We'll talk about that coming away. We have stats from the women's Final Four weekend here in Phoenix as well. And boy, big companies are jumping on the bandwagon of dirty sodas out there. We'll talk about an intriguing one in my eyes coming your way. We'll talk about it. Come on back. McCollum on Business. And we're back here, McCollum on Business Wednesday edition. For some reason, I keep thinking today's Thursday. I don't know why I'm doing that here today. I believe it's Wednesday out there. But welcome to McCollum on Business. You just saw the commercial there for the Real Matrix as well. That comes out on Fridays. New episodes, 10 a.m. here at Robat TV, noon at on the podcast systems. Just search the Real Matrix Angry Patriot. If you like to listen to it on your podcast systems, and of course, that is on Rumble, rumble.com/user/TME Media, and it pops right up for you there as well. So look for the Real Matrix on Friday. Of course, 20 something episodes up right now. You can catch up on what the Real Matrix and what the Angry Patriot is kind of out there looking at in the world. Got the pit stop coming your way as well. Every week it comes out in the afternoon by 2 p.m. midweek. Well, the Pit Stop's race-based here. Follow them at the Pit Stop Talk on X and your favorite social media. Look for them on your podcast system as well. You can either search the Pit Stop Talk or the Pit Stop with Steven. Be a little bit more specific with that search on Apple, Google, Spotify, iHeart, etc. A lot of pit stops out there that are defunct now, so you got to search a little bit to get to find it there. But it is there for you. Be out here as well here this week for you. Look back at last weekend's limited racing over Easter. Well, the NASCAR Cup Series gets back underway. Racing goes to Bristol this weekend. Of course, follow us on X, the Pit Stop Talk as well. You can find replays of that show on the YouTube channel of our production company, TME Media AZ. Follow us also on X, TME Media AZ. That's our parent company of our production company there that does our broadcasting and does a lot of production for a lot of things. Not We produce a lot of things. Not all of it gets put out by us. We do production for some other entities that they put it out on their own side. Follow us at TME Media AZ on X as well. And that'll give you an idea of what we do. We're getting that up and running. And of course, as soon as we're done here, we get this up on demand as well. TME Media AZ on YouTube. No podcast for this show, but the main event, live 8 to 10 here at Robat TV. It has a podcast there as well. Just search the main event with Steven or the main event with Dale. It pops up on that podcast system. And of course, on TME Media AZ on YouTube as well for on demand. It's coming up 8 to 10 live here. As soon as we're done here, let's get back into this with the Market Watch. Beautiful day here on the market. There's no other way to put it. 1,167 points up right now for the Dow Jones as we look at it. The S&P 500 is up 146 points right now. Then you got the NASDAQ. That's up 612 points. The NASDAQ is to 22,632. And then the Russell 2K, well, I think our link is broken on your screen there because it's actually up 80 points right now to the 2625. So you can see the percentage and number is off to the right there. It is 80 points up here today at that 25 for the small cap index. And then the numbers are so high on the market today that even the company we use to put this out is even just messing around with the numbers and just confused by them. Then you got Bitcoin above 70,000 finally today, 71,500 for Bitcoin here this morning as well. Obviously, oil prices, the ceasefire. Trump is threatening tariffs of 50% on countries that supply military weapons to Iran as well. So all that's out there in the market, all positive. Strait of Hormuz reportedly is being reopened. Talked about that at the top of the show, and that's what we're getting today. Oil is officially behind about $94. Let's say $95 for oil here this morning. That's a big drop from the 110 it's been trading at for a couple of whiles now. Like I said, with that ceasefire in place, I'm even seeing stories on markets shifting, even on Fed rate cuts this year and how many could be coming with this ceasefire. So a lot of positive optimism here in the market as well with the news. Now, several industries are being affected by this. Shouldn't surprise you. Like, for instance, energy stocks. First one we're going to look at, ExxonMobil, is what we're going to look at here in the energy stocks. Now, not a surprise. It's down 6% today. Occidental Petroleum, Diamondback Energy, Chevron, ConocoPhillips, Halliburton, all down today. Well, it's simple. Because oil prices are below $100 per barrel, they're not going to make as much money, obviously, as it was when it was at $110 per barrel. The reopening of the Strait of Hormuz means that lack of supply issues, as that'll get flowing again. So all these energy stocks are going to be down today, and you see ExxonMobil there 6% down. Occidental Petroleum's down about 7, Diamondback Energy about 7. APA's down about 9% right now. So if you own oil stocks, shouldn't shock you. They're down today based off of this ceasefire. And then travel stocks is an industry we're going to look at as well. Let's throw up United Airlines here as a stock. As we look at this, 12.96% up. Look at this. Right off this morning here, I see stories when I woke up this morning. Delta cuts growth plans because their fuel costs are through the roof as well. So that was the story this morning that we were looking at. Delta itself is up 12% today. You see United Airlines is up 12.85% today as well. Well, all your travel stocks are going to be up because fears of the demand going away because of the pricing with oil stocks. Well, all those fears are gone now as well. The higher gases are, the lower consumer spending can be. Then, of course, you got higher costs on the gas side as well. Well, with the oil prices tumbling, ceasefire happening, those fears have dissipated. All travel stocks are way up today. United Airlines 13, Delta up 12 here this morning as well. I'll tell you, Southwest is up 9% as well. Then you got cruise lines. Royal Caribbean's the next stock we're going to look at. Well, they're up today 10.37%. Carnival's up 10%. Norwegian Cruise Line is up 9% for Norwegian. I'm sorry, 7.5% for Norwegian right now. Expedia is up 5% today. So oil stocks down, energy stocks down today. Well, travel stocks way up today based off of this ceasefire and off of the oil prices as well. So, good day here on the market. Well, good and bad, right? If you're an oil stockholder, you're dealing with that. We told you earlier the precious metals, gold, silver, copper is what we specifically talked about with Freeport McMoran earlier, all up today as well, based off of all of the ceasefire news. And now let's get into some local stories out there. We talked earlier, right, about fatigue in the marketplace. Your employees are don't like working for you anymore, and kind of things you can do to spruce it up. One of them was communication. Well, Fry's Food Stores, they're going to have to pay a settlement. They have to update its training for management. Well, because they didn't communicate properly, right? This is all following a disability discrimination lawsuit from the Arizona Attorney General's office. So, the Civil Rights Division of the Attorney General's office back in 2025 sued Fry's, which is the parent company's Kroger, and they sued him on behalf of a deaf former employee. The suit alleged that the grocery chain discriminated against the employee because they refused to provide American Sign Language interpretation for that employee. Here's the quote from the Attorney General Office Civil Rights Division. Quote, instead, Fry's relied on ineffective means of communication, including lip reading, written notes, and having family members interpret staff trainings. They even cited the employee with insubordination for refusing to sign investigative documents that he did not understand. That's from a press release there. They went on to say the employee was ultimately terminated, in part for that insubordination, without ever being provided effective communication. Yeah. So, under a consent decree from the Maricopa County Superior Court, Fry's agreed to pay the former employee $120,000, and then they reclassified his records of his firing as a voluntary resignation instead of being terminated. Fry's also agreed to hold new anti discriminated training for management and even establish a relationship with an American Sign Language interpreting agency. And I get it. 2026, though. How do you not know how to handle? I'm going to use the term disabilities, and I know deafness isn't disability per se. And people might be offended by that, but how do you not know how to handle these types of issues, these types of things in the workplace today? Well, Fry's failed on that one and paying the price and hopefully getting that fixed moving forward as well. And we know the 2026 Women's Final Four in Phoenix. Well, we have some numbers coming in, not official numbers. They're still projecting them, but it is projected to bring us a record setting $149 million economic impact for last weekend. That is really huge numbers as well. And that's cementing Phoenix here as a premier destination for major sporting events. It was a 4-day event, 2 days of games, 4 days total, but it drew capacity crowds, boosted local hospitality, tourism, and restaurants throughout the Phoenix area. So according to the implant economic modeling that they use, that's where they get that number of $149 million total economic impact for the Phoenix area. There was a high attendance spending. The event brought over 150,000 fans to Arizona, which obviously creates significant revenue for hotels, restaurants, local businesses, shops, etc. Well, there's huge demand as well. Ticket prices reached near record highs. Courtside seats for the championship actually went for $4,400 on secondary markets, which that shows there is a large popularity to this year's tournament in downtown Phoenix. And then the regional economic boost. Just for the Phoenix area, the Arizona Chamber of Commerce and Industry, they say the 150,000 visitors that came to the valley for the games, they provided a significant, far-reaching boost for the local economy. And then local businesses, restaurants, brewers utilize the spotlight to highlight their services. And specifically, a lot of the opportunities for women in industries where they're underrepresented got some a little bit of a perk up as well here for the women's Final Four out there. So, not a surprise that having the Final Four here is a big deal economically and things. And it turns out to be true here with that women's Final Four. And finally, dirty sodas are all the rage, right? You got swigs growing up all over town here. You've got everybody getting into it. Well, Mountain Dew, it's joining that dirty soda trend that's out there. So it's they're calling it the Dirty Mountain Dew. What they're calling it. Boy, whew, they got creative with that name, didn't they? Well, it's hitting stores right now, along with Dirty Mountain Dew Zero Sugar, if you're more inclined for that. They're available in 20-ounce single bottles, 12 packs of 12-ounce cans as well. If you don't know what a dirty soda drink is, well, you can add something to your regular drink. So either a flavored syrup or even a coffee creamer, a flavored coffee creamer to your carbonated soda. So take a Mountain Dew and add some cherry flavor to it. It's a big drink alternative out there. It's very popular, especially among the younger crowd. Dirty Mountain Dew mashes up the soft drinks, and this is from their press release from so Mountain Dew's iconic citric flavor with a smooth, creamy flavor finish. There you go. I love Mountain Dew. I've had to get away from it. Dr. Pepper's the one vice I can't stop. But Mountain Dew, I was able to move away from. But Dirty Mountain Dew? Yes, please. I will take it with the right flavors involved in that. Absolutely. Folks, I appreciate you joining me here for this Wednesday edition of McCollum on Business. We'll be back tomorrow on a Thursday to keep it rolling here. Hey, do we keep going with this market increase here with the ceasefire? Does the ceasefire hold up for a couple weeks? Is question number two. Well, to give you all those details coming up on Thursday morning, come and join us. For now, the main event up next, folks. We'll see you in just a little bit. Have a great Wednesday night.